Hey, everybody. Retail sales numbers that hit Thursday said the consumer barely moved, up 0.2%. Not a big deal, except that the headline is hiding the real story. And if you own a retail strip center, the real story is the one that pays your rent roll. Let's get into it. Now, here's the number the Census Bureau put out on Thursday. Retail and food services sales rose 0.2% in June to $768.6 billion. Now, on its face, it looks flat, but look at what dragged it down. Gas stations. Receipts at the pump fell more than 5% because gas got cheaper. That's not the consumers pulling back. That's the same gallon of gas costing less. Strip out gasoline and sales rose 0.7%. Strip out autos and gas up 0.4. In the control group, the slice economists feed straight into GDP rose 0.5%. Its sixth straight monthly gain. So the honest read isn't the consumer stalled. It's the consumer kept spending and cheaper fuel freed up the wallet to do it. Now, in commercial real estate, a falling headline driven by cheaper gas is a tailwind for your tenants, not a warning sign. Every dollar not spent at the pump is a dollar that can move to the nail salon, the taco joint, or the pet store in your retail center. So even though the plus 0.2% headline is waving at you, the number under the number is stronger, and it's the one that shows up in your tenant sales. Now let's follow the money into the categories that matter for strip retail. Food services and drinking places. Restaurants, bars, and the quick service pad side rose in June and sit 3.8% ahead of a year ago. That's the one services line in the whole retail report, and it's the exact tenant type filling unanchored strip space right now. This matters because the tenant mix in a modern strip center has shifted hard toward food, service, and experience, the stuff you can't click and ship. Restaurants, fitness, medical, beauty, pet. And when the data shows restaurant spending still climbing year over year, that's your rent roll telling you it can absorb renewals and modest rent bumps. For strip centers, service and food tenants are recession-resistant demand you can underwrite, and their why well-located strip centers has been the quiet outperformer this cycle. Practical move for a hold period client, pull your tenant's sales reporting where your leases require it. If their comps track the national food services trend, you have leverage on a renewal term and a cleaner story at disposition. So the consumer's fine. What about the cost of money? 2 days before the retail report, we got June inflation, and it cooled hard. The consumer price index actually fell 0.4% on the month, the biggest one-month drop since April 2020. Driven by the same plunge in energy. Year over year, inflation eased to 3.5%, below what forecasters expected. The 10-year Treasury had spiked to a 2-month high of 4.62% midweek, then settled back to about 4.55 by Friday as the soft inflation print pulled yields down. The Fed is still expected to hold at this month's meeting, and futures actually trimmed the odds of a later hike, but they didn't erase them. This is a market that got one good inflation report and is not yet convinced. So let's run the math the way an owner should. Take the 4.55 10-year as your base, add a retail lender spread, call it 175 to 225 basis points, and your pricing acquisition or refinance debt roughly in the low to mid sixes. On a strip center deal, that's the number that sets your debt service coverage and your cash on cash. A softer inflation trend that keeps the 10-year from running back up toward 4.6 and beyond is what protects that math. The read for timing, cooling inflation is friendly to your financing, but the futures market still isn't ruling out a hike. If you're weighing a refi or a sale, this is a window to run scenarios, not to assume the direction is settled. So bottom line this week, don't let the flat headline fool you or your buyers. The consumer kept spending, cheaper gas freed up the wallet, restaurant and service demand, your tenant base, is still climbing, and the financing backdrop got a little friendlier. That combination is a good week for strip retail. If you own a retail center and actually want to know what all this means for your rent roll or your next move, that's the conversation I have every day. Feel free to reach out. My contact information is in the description. I'm Ray, and this was your Retail Weekend Wrap Up. See you next week.